we've been investors in the sector since 2014. We've seen, I think this is the seventh or eighth uptrend to downtrend now that we've seen. And typically when we see those, the downtrends are 50% and the uptrends are, 100% plus. So, there's lots of opportunity. You just have to be nimble. And, what we think is that we're obviously closer to the start here of the next uptrend than we are to the end of, or to the start of the downtrend.
Bruce Campbell is back. He's the portfolio manager of the Stonecastle Cannabis Growth Fund. Bruce, welcome back.
Yeah, thanks for having me on again.
It's always a pleasure, Bruce. Your insights are very appreciated. And Bruce, I've been seeing no end of breast beating and tearing out of hair from U.S. cannabis investors as the U.S. cannabis sector seems to be struggling in equal measure to the Canadian cannabis sector. And in fact, all cannabis publicly traded companies worldwide seem to be sort of under the weather, to say the least. What is the prognosis and what is the diagnosis?
Yeah, I mean, when you look at it, obviously there's a big disconnect, in my opinion and in our opinion, in the U.S. between the stock prices and the underlying businesses. And so, ultimately that's when you talk about, the prognosis and the diagnosis, that's ultimately what will win the day at the end of the day is, once these businesses get recognized for what they are and some of the, external factors that have caused the stock prices to sell off the way they have disappear, then at that point in time, the stock prices are going to do amazing things. But when is that? Is that, 2 weeks from now, 2 months from now, 2 years from now? And obviously one of the challenges that we've seen in that market is really structurally around access to the stocks itself, who can hold it and who can trade them. And so, kind of the latest rumor that's been kind of circulating in the market is that JP Morgan is going to pull back from custodying any assets in the sector. And so, that would obviously be another potential blow. And if you saw some of the cannabis names in October, they were off, 30% upwards. So, maybe this was just front running of that decision coming down.
Yeah, that's intriguing. I've seen some of the buzz about that. And it strikes me that is interesting because JP Morgan is not the most visible house buying cannabis stocks over the last several years. So I don't really understand. I think that sort of negative is magnified out of proportion. That's just my impression. But it seems to me that people are more concerned with the passage of the Safe Banking Act. And is it actually going to become a thing? And is it going to get, is it going to solve all the problems? And if you were to judge the sort of tone of the zeitgeist in social media, you might conclude that it's really not going to make that much of a difference. And that's possibly why investors are sort of pulling in their horns a bit.
Yeah, I mean, that's probably one of the bigger of the factors that are at play here. If you go back, rewind the tape back to a year ago, everyone was quite excited. Election was happening. Biden was coming in, and the thought that one of the first things he would work on was legalizing cannabis in some capacity, or making it federally legal, or not criminal in some capacity, decriminalizing it. And that certainly hasn't been the case. I mean, it's fallen on a back burner. There's been multiple attempts to try to get Safe Banking, States Act, you name it, through the legislative process, and it just really hasn't happened. The latest is that they were going to try to attach it to the stimulus bill, but it sounds like with the details and all the political back and forth, that's not going to happen. And so, most investors who were looking at that as a catalyst have now completely walked away. You throw on top of that the custodian issues between, JP Morgan perhaps and some of the others that have walked away. And now you're probably seeing some tax loss selling because it's been a strong year in the capital markets beyond cannabis. And so, there's people that are probably trying to offset their losses with their gain, or their gains with their losses. And so you've probably seen some of that, and it's, turned out to be quite a rout for cannabis investors for sure.
Yeah, you bet. So Bruce, you're hosting the Stonecastle Indicator Update webinar on November the 9th. And I was curious as to what participants in that webinar might be able to learn.
Yeah, so what we talk about there is, we always talk about our top-down positioning, and what specifically we do is try to figure out whether or not we're on offense and neutral or defense at any given time. So if we're on offense, obviously we're fully invested. In defense, where we typically have large cash positions, possibly some short positions or inverse positions. And what we'll walk through on that webinar is really what it is that we see from a fundamental economic standpoint, and then also from a market technical standpoint that has us positioned right now where we are. And we'll, sort of walk through the fundamentals, walk through the technicals, and then, draw a conclusion at the end so that, investors can take a look and figure out, exactly how we think and what we see, and then obviously make their own decisions from there.
Yeah, you bet. Okay, so what time on the 9th is that get started, and how do investors log on?
Yeah, so probably the easiest, if they haven't registered and haven't got a link, is to send an email to info@stonecastlefunds.ca, and it starts on the 9th at 4:30 Eastern, and it runs about half an hour. If they happen to miss the live broadcast, we do a recording as well, so they can get the registration details for the recording by sending an email to us as well.
Sure. Okay, Bruce, let's switch gears a bit and talk about your Stonecastle cannabis portfolio. How have you been sort of dealing with the continued weakness in the cannabis sector in your portfolio?
Yeah, I mean, obviously it's been challenging. We've had, we've had negative performance on the year now, along with the sector. So obviously that's never fun for investors. One of the things that we've been trying to do, where possible, is we've been, trying to high grade the portfolio. So, if we have scenarios where, it seems like everything's down, I don't think you can probably find anything that's direct cannabis that's up this year. So what we've tried to do is, position the portfolio into companies that we think are attractive and probably been punished more so than some of their peers, and have the potential to recover once the turn comes. And we've been investors in the sector since 2014. We've seen, I think this is the 7th or 8th uptrend to downtrend now that we've seen. And typically when we see those, the downtrends are 50% and the uptrends are 100% plus. So there's lots of opportunity. You just have to be nimble. And what we think is that we're obviously closer to the start here of the next uptrend than we are to the end of or to the start of the downtrend. And so when we look at the opportunity set, it's to somebody who's patient. And I mean, that patience probably has to go out, say 6 months or so, but, it could start, tomorrow, it could start in 3 months' time, it could start in the new year. We don't know when it will start, but just looking at the valuation and how attractive it is at some point, and the growth rate, at some point in time, the sector is going to have a fairly big move again.
Yeah. So, I mean, apart from the, the market weakness, which is one thing, the structural weaknesses that you refer to, the balance sheets and the earnings profiles of the best performing cannabis companies in the United States suggests that, it really doesn't match the market weakness. So I'm curious as to why is the financial performance of these companies not having an effect on the negative performance in the stock market?
Yeah, I mean, obviously, we have seen tremendous improvements in their business. A lot of the big MSOs are growing. They're growing their revenue line at sort of 25 to 50%, and they're growing their EBITDA at 50 to 100%. Growth like that is unbelievable. And the thing is that that's just probably in the starting points for that. It's not like they've had this big year for growth and then that's it. It'll be done. There's a lot of new states that are rolling out programs, especially in the recreational side of things, which it takes time to ramp up. And when it does, it can have significant numbers, but it takes those companies time to build their facilities, build their infrastructure, and then obviously the market takes a while to build as well. But that's what's coming. And when you look at kind of what we think is that really it's some of these bigger structural issues that have had the impact. If you're a US investor, you probably still are shying away from cannabis for a couple of reasons. One is, you might not be aware of the growth rates. One, two is, you have challenges obviously with the fact that it's still federally illegal and you don't want to mess with your charter to manage securities. And then, obviously 3 is that, the price momentum hasn't been there, and there's so many other areas right now in the markets that have strong price momentum. So, I think it's a combination of those factors, but, at some point in time, it will go the other way. And from our perspective, the sentiment is getting very close to where it normally runs to be negative, where, nobody wants to look at cannabis. The stocks themselves, have a tough time having, a positive day, let alone a positive week. And, even the best quality companies are being sold off.
So, Bruce, it sounds to me like if we were to look at the financial performance of these companies and were to look at the depth of the discount that has occurred as a result of the negative sentiment, that, I'm not trying to put words in your mouth, but it would strike an external investor that cannabis stocks are a bit of a screaming buy down here, which only begs the question, is now the time to start, wading in and building a position if you've been on the sidelines? Or do you think there's more pain to come and still a better price to be had?
If we weren't investors in the sector right now, we'd probably take a, probably 2 or possibly 3-pronged approach. So we would buy part of our position here and then add to that position when you started to see some of the price momentum improve, because, over the next probably 45 days, we could potentially see more selling on tax loss. Once that's done, I think at that point in time, investors will start to look at it again. We'll be at that point in time, we'll be rolling up to the end of the year. People will be looking for opportunities, and, they'll be harvesting some of their gains in other areas that have done really well and looking for areas that haven't done so well. And if you just look at, on aggregate, the US MSOs, they've dropped from, call it 20 times 2022 EBITDA to now they're down around less than 10 times, and there's some that are trading in the 4, 5, 6 range that are large MSOs that are growing at those multiples that we talked about earlier.
Right. All right, Bruce. Well, great insight as usual. Really appreciate your time today. We'll come back to you soon. Thank you for joining us.
My pleasure. Thank you.
You bet. Bye for now.